All right, let's dive in. We're tackling S corporations today.
Ooh, S Corp. Good choice.
Everyone wants to know if this special tax designation is like their ticket to success.
Right.
Luckily for us, we have some really good resources to help us figure this all out.
Yeah. What are we looking at?
We have chapters from DIYS Corporation.
That's a good one.
Yeah, so we'll be deep diving into that.
It's smart to really get to know S Corp.
Okay.
I think a lot of people just, focus on the tax advantages.
Right.
But there's actually, when you really dig into it, like this book does, there's some surprising benefits.
Okay.
Stuff that goes way beyond just, saving some money on your taxes.
Interesting. Like what kind of things?
Things like, easier access to loans
Hmm.
and even unemployment benefits,
Oh, wow.
which most people don't realize are even connected to this.
Okay, that's already got my attention, piqued my interest. But before we get too far ahead of ourselves,
Oh.
can we do a quick level set?
Yeah.
For sure. I know there are different ways to structure a business legally here in the U.S.
Mm-hmm.
Can you give us a quick overview so we're all on the same page?
Yeah, definitely. So in
Yeah.
the U.S., you've got sole proprietorships,
Mm-hmm.
partnerships, LLCs,
Okay.
C Corp, and of course our star of the show, S Corp.
Right.
And each one of those structures comes with its own set of legal and tax implications.
Yeah.
For example, with a C Corp, you can run into what's called double taxation.
Double taxation. That sounds not good.
Yeah, it's not ideal.
What is that?
It's where the corporation gets taxed on its profits,
Okay.
and then the shareholders get taxed again on those same profits when they're distributed as dividends.
Oh, I see.
So you kind of get hit twice
Ouch.
for the same earnings.
Yeah, that's not great.
S Corp, on the other hand, they have this this clever way of sidestepping that issue.
That's where it gets really interesting, right? So how do they do that?
Well, S Corp are kind of like the hybrid vehicles of the business world.
Okay.
They combine the limited liability protection that you get with a C Corp,
Mm-hmm.
but then they also have the pass-through taxation
Okay.
of a partnership or sole proprietorship.
So the profits and losses go directly to the owner's personal income tax return.
Exactly.
Okay.
Which means the S Corp itself isn't on the hook for federal income tax.
Okay.
It's the shareholders who report their portion on their own, individual returns.
That's a pretty slick setup. I mean, that makes a lot of sense why so many small businesses are really interested in this structure.
Yeah.
But I'm guessing there are some hoops to jump through to qualify,
Oh, yeah,
right?
you bet. The IRS has got some ground rules.
Okay.
So for starters, you have to be a domestic corporation,
Okay.
meaning formed in the U.S.
So no, sneaky offshore stuff.
Right.
Got it.
And not just anyone can be a shareholder.
Okay.
It's restricted to individuals,
Mm-hmm.
certain trusts and estates.
Okay.
Plus, there's a cap on the number of shareholders.
Oh, okay. So this is really geared towards small businesses then.
Yeah.
Gotcha.
It's usually around 100,
Okay.
though it can vary a little bit by state.
So no Fortune 500 companies trying to sneak in under the radar.
Definitely not.
Got
And they also put limits on the types of stock the corporation can issue.
Okay, so assuming you meet all those requirements, what are the actual steps
Right.
involved in forming an S corp? I'm guessing it's pretty complicated.
Well, actually, DIYS Corporation lays out a surprisingly straightforward process.
Okay.
They even suggest starting by forming an LLC first,
Interesting.
which I thought was really interesting.
Why start with an LLC? What's the advantage there?
Well, it's kind of a time saver
Mm-hmm.
because a lot of the requirements for forming an LLC
Mm-hmm.
are the same as for S Corp.
Oh, okay.
So you're basically laying the groundwork
Okay, I see.
in advance. Plus, operating as an LLC initially
Mm-hmm.
gives you some flexibility to test the waters
Yeah.
before making the switch to the S Corp status when it's, more advantageous.
Yeah, that's a really good point.
Yeah.
I can see how that would be helpful for a lot of businesses. Okay, so after the LLC, what's the next step?
Next up, you got to get your employer identification number,
Okay.
or EIN, from the IRS.
Right.
The book says you can do that online. It's easy, and you get it immediately.
Oh, instant gratification. Love that.
Right.
What else is on the checklist?
All right. You also need to figure out your North American Industry Classification System code,
Oh, boy.
or NAICS code.
Yeah, those are always fun.
It's basically a way to categorize businesses
Okay.
for statistical purposes.
Okay.
The book points you to the right resources to find the right fit
Gotcha.
for your type of business.
And after you've got that squared away, then what?
Okay, so the final step is filing Form 2553 with the IRS.
Oh, lovely. Another form.
That's the official election by a small business corporation form.
Okay.
You're basically like telling the IRS, hey, we want to be treated as an S corp for tax purposes.
Okay. And the book also gives some really good practical tips too, like about um, the importance of having all the right documents
Yes.
to open a business bank account
Absolutely.
and the benefits of being your own registered agent, like
Yeah.
all those little details can really like trip people up.
Oh, they can, yeah, that's where like a resource like this can really be invaluable.
Absolutely. All right. So you filed all your paperwork.
Yep.
IRS has given you the thumbs up.
Right.
You're officially an S Corp. Woohoo.
Congratulations.
What happens next?
Well, now you got to understand like the ongoing responsibilities
Okay.
of operating as an S corp.
Right.
One of the most crucial ones is understanding the rules
Okay.
around something called reasonable salary.
Ah, yes. The book highlighted that as like a potential catch. It seems like the IRS is pretty keen on making sure that S Corp owners aren't trying to dodge taxes.
Exactly.
Yeah.
They know that S corp can be, a powerful way to potentially reduce self-employment taxes,
Okay.
but they want to make sure that you're not abusing that benefit.
Yeah.
And the reasonable salary rule is kind of their way of like making sure you're playing by the rules.
So even though the S Corp profits pass through to the shareholders, right? Anyone who works for the company, including the owners, has to be paid a reasonable salary.
That's right.
The book even shares this kind of crazy story
Okay.
about a real estate agent who got into some hot water
Oh, yeah, he got in trouble.
because he wasn't paying himself enough.
Yep. He was trying to like take most of the company's profit as dividends to avoid those pesky payroll taxes.
Oh, sneaky, sneaky. But the IRS was not amused.
No, not at all.
So what happened?
Well, they ended up reclassifying a big chunk of those dividends as wages, and he got hit with a hefty bill
Ouch.
for back taxes and penalties.
That's not good. So how do you figure out like what a reasonable salary actually is?
Right.
Is it just whatever you think your work is worth?
If only were that simple.
Right.
The book suggests a more like practical approach.
Okay.
You look at the median hourly rate
Mm-hmm.
for your occupation,
Okay.
as reported by the U.S. Bureau of Labor Statistics.
So you have like some actual data to back it up.
Right. Gives you a solid, objective benchmark.
That's smart. You're not just like pulling numbers out of thin air.
Exactly.
But wouldn't that mean that some S Corp owners might end up like taking a smaller salary compared to someone working for like a C Corp in a similar role?
That's a valid point.
Yeah.
And it's a trade-off
Okay.
that S corp owners need to like weigh carefully.
Okay.
But on the flip side, remember you could be saving significantly on taxes
Right.
on the portion of your earnings that are distributed as dividends.
Right. That's where the potential tax savings really come into play.
Exactly.
Can you give us like a concrete example
Sure.
of how that works in practice?
Yeah. So let's say your S corp brings in a profit of $100,000.
Okay.
You determine that a reasonable salary for your work is $40,000.
Okay.
That leaves $60,000 that can be distributed as dividends.
Okay, so you pay income tax on the $40,000 salary,
Right.
but you avoid paying self-employment tax on the $60,000 in dividends. That's where the magic happens.
Exactly. And remember that self-employment tax is it's a substantial 15.3%.
So in that example, you could potentially be saving like over $9,000
Yeah.
in taxes just by structuring your earnings this way.
That's the power of the S corp structure.
That's wild.
And that's just one example. As your business grows and your profits increase, those tax savings can really like snowball.
My mind is officially blown. I'm starting to see why so many entrepreneurs are drawn to this. But let's shift gears for a second.
Okay.
And talk about the actual process of filing taxes as an S Corp owner. What forms do I need to be familiar with?
All right, so there are a few key players here. First, you'll get a W-2 form, just like any other employee.
Okay.
This reports your salary
Okay.
and any taxes that were withheld.
So you're both employee and owner. That's an interesting dynamic.
It is.
Okay, what else?
Then the S Corp itself, it files Form 1120S.
Okay.
That's the U.S. income tax return for an S corporation.
Okay.
This form outlines the corporation's, like, income, expenses, and profits or losses for the year.
And this is where the pass-through concept comes into play.
You got it.
Okay.
Instead of calculating the corporation's tax liability, the 1120S
Okay.
generates a Schedule K-1 for each shareholder.
So what's the deal with Schedule K-1?
Think of it as like a personalized report card for each shareholder's share of the S-Corp's income, deductions, and credits. It's crucial for, like, individual tax filing.
So I'd use the information from my W-2
Right.
and Schedule K-1
Right.
to complete my personal income tax return, Form 1040.
That's how it all comes together. It connects the S-Corp's financial activity to your personal tax obligations.
Gotcha. The book also mentioned something called the Tax Cuts and Jobs Act of 2017,
Yes.
specifically the 20% deduction for pass-through businesses. How does that impact S-Corp?
That's a great question. This deduction is officially known as the Section 199A deduction.
Okay.
It can potentially save S-Corp owners a bundle.
Okay.
Eligible taxpayers can deduct up to 20%
Wow.
of their qualified business income.
More tax breaks, always a good thing. But I seem to recall the book mentioning some limitations.
Right. There are a few. For instance, it's phased out
Okay.
for specific service businesses,
Okay.
like law firms or medical practices. If the owner's taxable income exceeds certain thresholds.
So those specified service businesses, they might not get the full benefit.
Exactly.
Okay.
There's also some calculations based on W-2 wages
Okay.
and the unadjusted basis of qualified property.
Okay, hold on. What's the unadjusted basis of qualified property?
It's basically the original cost of certain assets
Okay.
minus any depreciation.
Okay.
That can further limit the deduction in some cases.
Gotcha.
It can get a little complicated.
Tax forms, the language of love. Right.
Right.
Just kidding. But seriously, it sounds like this deduction requires, like, careful navigation. I'm glad the book includes a decision tree to help us figure all that out.
Yeah, that decision tree can be a lifesaver.
Right,
It guides you through different scenarios.
Okay.
So you can accurately determine how much you can deduct. It's like having a personal tax guide.
Right, in your hands. I like it. Okay, we've covered a lot of ground when it comes to the potential tax advantages of S-Corp, and I'm definitely, like, seeing the appeal. But let's not forget, the book hinted at benefits that extend beyond just taxes, right?
Absolutely. And this is where things get even more exciting.
All right, I'm all ears. Spill the tea on these hidden S-Corp perks.
One of the most valuable is the ability to access health insurance
Okay.
and contribute to an HSA, a health savings account,
Okay.
through your business.
Wait, so I could potentially get health insurance through my S-Corp?
That's right.
Wow.
And the best part is the premiums are deductible as a business expense.
Okay, so that reduces my taxable income.
Exactly, putting more money back in your pocket.
That's a huge deal,
Mm.
especially for, self-employed people like me who often have to pay, like, exorbitant rates for health insurance. It's like getting a hidden discount.
It's a major perk that many people just, like, overlook.
Yeah, I can see that.
And on the topic of, financial well-being, S-Corp status can also provide some advantages when it comes to retirement planning.
Oh, you mean things like 401ks and IRAs?
Exactly. As an S-Corp owner, you may be eligible to set up like a solo 401k or a SEP IRA through your business.
Okay.
Both of those allow you to make pre-tax contributions to your retirement nest egg.
So not only could I be saving on taxes now,
Right.
but I'm also, like, setting myself up
Yes.
for a more comfortable retirement down the road. That's a win-win in my book.
It's all about taking a holistic view
Right.
of business ownership.
Okay.
Thinking about the long game
Yeah.
and how you can leverage your business structure to achieve, both your financial and personal goals. And there are even, like, more benefits we can explore.
Oh, don't stop now. I'm hooked. What else is on the list?
Well, let's talk about business insurance.
Every business needs insurance, right?
Of course.
So what's so special about it in the context of an S-Corp?
Well, having an S-Corp structure can sometimes make it easier to qualify for certain types of insurance,
Okay.
like business liability insurance or professional liability insurance. The book actually mentioned Hiscox as a potential option for small businesses.
Oh, okay.
Mm-hmm.
And I imagine there are, like, tax deductions associated with those premiums too, right?
You bet. Those premiums are usually deductible as a business expense.
Further lowering your taxable income. I'm sensing a theme here. S-Corps seem to open up a lot of opportunities for tax optimization.
You do.
Is there anything else that we should be aware of?
One more poke that can provide like valuable peace of mind
Okay.
is the availability of tax audit defense services.
Ooh, interesting. So if the IRS comes knocking, I've got backup.
Exactly. You could purchase a tax audit defense package,
Okay.
and they'll handle all the communication with the IRS if you ever get audited. It frees up your time and energy to
Wow.
focus on your business, and it can significantly reduce stress.
That's definitely something I'd want to consider, especially if like I'm handling my own bookkeeping
Yeah.
and tax filing.
Yeah.
Having that like expert support could be a game changer.
It can make a world of difference in avoiding, potential headaches and complications down the road.
We've uncovered so much valuable information about S-Corps today,
It's been a lot.
from like the structural basics to the tax advantages.
Mm-hmm.
And now these like incredible perks. It's clear they offer a lot of potential for small business owners.
Yeah, I think so.
But before we get too carried away,
Yeah,
I think it's important to step back and ask, are there any downsides? What's the catch?
that's a smart question to ask. Just
Yeah.
like any business structure, S Corp come with their own set of trade-offs.
Okay.
DIY S Corporation is really good about being upfront about those.
Okay.
One thing it really emphasizes is the need for like meticulous record keeping.
Okay, so there's going to be more paperwork.
There is. It also often means like budgeting for additional accounting
Okay.
and legal services.
To make sure that everything is done right.
Yeah, to make sure you stay on top of everything.
Are there any other potential drawbacks that we should be aware of?
Well, keep in mind that the IRS tends to scrutinize
Okay.
S Corp shareholder salaries pretty
Right.
carefully.
Right.
They want to make sure owners aren't trying to avoid those payroll taxes that we talked about earlier.
Right. That reasonable salary rule is definitely something to keep in mind. It sounds like finding that sweet spot between like tax efficiency and compliance is crucial.
It is. You don't want to end up in hot water with the IRS.
Nobody wants that.
Another thing to consider is the restriction on shareholder types.
Okay.
Only certain trusts and estates are allowed to hold shares in an S Corp.
So if you're thinking about like bringing on a wide range of investors down the line, that
Yeah.
could be a limiting factor.
Exactly. And finally, although we talked about how S Corp avoid double taxation at the federal level, some states
Uh-oh.
impose their own taxes on S Corp.
So it's not a guaranteed tax haven in every state.
Unfortunately, tax laws are rarely that straightforward.
Right.
It really depends on like the specific state where your business is located.
Okay.
DIY S Corporation recommends doing some like homework on your state's rules to get the full picture.
Yeah, it sounds like it's always a good idea to like consult with a tax professional
Absolutely.
to make sure that you're like making the right decision for your specific situation.
They can help you navigate all the like complexities and nuances
Right.
of the tax code.
This has been such an eye-opening conversation.
It has.
We've really gone from 0 to 60 when it comes to understanding S-Corp.
Yeah, I think so.
We've explored the structure, the tax advantages, the hidden perks, and even the potential downsides.
We've covered a lot.
We did. But before we wrap things up, I have one final burning question.
Okay, hit me.
Based on everything we've learned today,
Yeah.
with all the potential benefits, the tax savings, business growth, personal financial security,
Right.
could exploring the S-Corp structure be the strategic move your business needs?
That's the million-dollar question, isn't it?
It is.
And ultimately, it's one that only you can answer.
Right?
We've equipped you with the knowledge and the insights.
Mm-hmm.
Now it's time to apply that knowledge to your unique business and goals.
Exactly. Take what you've learned today.
Yeah.
Dig a little deeper.
Yeah.
Talk to a tax advisor. And most importantly, make the decision that feels right for you and your business.
Remember, knowledge is power. The more you understand about the options available to you, the better equipped you'll be to like make those strategic decisions.
That set your business up for success.
Exactly.
Couldn't agree more. Well, that brings us to the end of our deep dive into the world of S corporations. We hope you found it valuable.
We do too.
And we'll see you next time for another insightful exploration of a topic that matters to you. Okay, so let's dive into the actual, like the nitty-gritty of filing taxes as an S Corp owner.
That's right. Let's do it.
What forms do I need to be familiar with?
Okay, so there are a few key players here. First, you'll get a W-2 form,
Okay,
just like any other employee.
got it.
This reports your salary and any taxes that were withheld.
So you're like both an employee and an owner, which is kind of a weird dynamic.
Yeah, it is a little bit unique.
Okay, cool. What else?
Then the S Corp itself files Form 1120-. That's the U.S. income tax return for an S Corp.
Okay.
This form outlines the corporation's income, expenses, profits or losses for the year.
And this is where that pass-through concept comes into play, right?
Exactly.
Okay.
Instead of calculating the corporation's tax liability, the 1120-S generates a Schedule K-1 for each shareholder.
Schedule K1. Okay, what's that all about?
So think of it as like a personalized report card
Okay,
for each shareholder share of the S Corp's income, deductions, and credits.
gotcha.
It's crucial for individual tax filing.
Okay, so I'd use the information from my W-2 and Schedule K-1 to complete my personal income tax return, the 1040.
Exactly.
Really-
That's how it all comes together,
Yep.
It connects the S Corp's financial activity to your personal tax obligations.
Gotcha. The book also mentioned the Tax Cuts and Jobs Act of 2017,
Yes.
specifically the 20% deduction for pass-through businesses. How does that impact S-Corp?
Oh, that's a great question. Yeah, this deduction, it's officially known as the Section 199A deduction.
Okay.
It can potentially save S Corp owners a bundle.
Okay.
Eligible taxpayers can deduct up to 20% of their qualified business income.
More tax breaks, always a good thing. But I think the book mentions some limitations.
Right, there are a few. For instance, it's phased out for specific service businesses,
Right.
like law firms or medical practices, if the owner's taxable income exceeds certain thresholds. So those specified service businesses, they might not get the full benefit.
Right, right.
There are also some calculations based on W-2 wages and the unadjusted basis of qualified property that can further limit the deduction in some cases.
Hold on, what's unadjusted basis of qualified property?
Oh, yeah. So basically, it's the original cost of certain assets minus any depreciation.
Okay, okay.
It can get a little complicated.
Yeah, no kidding. Tax forms, the language of love.
Yeah.
Just kidding. But seriously, it sounds like this deduction requires some careful navigation. I'm glad the book has a decision tree to help us figure that all out.
Oh, that decision tree is a lifesaver and walks you through all the different scenarios
Yeah,
so you can accurately determine how much you can actually deduct. It's like having a personal tax guide.
right there in your hands.
Okay.
Okay, so we've covered a lot when it comes to the potential tax advantages of S-Corp, and I'm seeing the appeal. But, the book hinted at benefits that go beyond just the tax side of things.
Absolutely. And this is where things get even more exciting.
Okay, I'm all ears. Spill the tea on these hidden S-Corp perks.
One of the most valuable is the ability to access health insurance and contribute to an HSA, health savings account, through your business.
Wait, so I could potentially get health insurance through my S-Corp.
That's right.
Wow, that's amazing.
And the best part is the premiums are deductible as a business expense.
Okay, so that reduces my taxable income even further.
Exactly. It puts more money back in your pocket.
This is huge, especially for, self-employed folks like me who often have to pay those crazy, exorbitant rates for health insurance. It's like getting a hidden discount.
It's a major perk that so many people just overlook.
Yeah, I can see that.
And, sticking with the financial well-being theme, S Corp status can also provide some advantages when it comes to retirement planning.
Oh, you mean like 401ks and IRAs?
Exactly. As an S Corp owner, you might be eligible to set up a solo 401k or a SEP IRA through your business. Both of those allow you to make pre-tax contributions to your retirement nest egg.
So not only could I be saving on taxes now, but I'm also, setting myself up for a more comfortable retirement down the line. That's a win-win.
It's all about taking a holistic view of business ownership, right?
Right.
Thinking about the long game and how you can leverage your business structure to achieve both your financial and personal goals. And there are even more benefits we can explore.
Oh, don't stop now. I'm hooked. What else is there?
Well, let's talk about business insurance.
Every business needs insurance, right? So what's so special about it in the context of an S-Corp?
Well, having an S Corp structure can sometimes make it easier to qualify for certain types of insurance, such as, business liability insurance or professional liability insurance. The book mentioned Hiscox
Okay.
as a potential option for small businesses.
Makes sense. And I imagine there are, tax deductions associated with those premiums too, right?
You bet. Those premiums are usually deductible as a business expense, further lowering your taxable income.
I'm sensing a theme here. S-Corps seem to open up a lot of opportunities for tax optimization.
Yeah, they really do.
Okay, is there anything else we should be aware of?
One more perk that can provide like real peace of mind
Okay.
is the availability of tax audit defense services.
Oh, interesting. What's that?
Yeah, so you can purchase a tax audit defense package,
No way.
and they'll handle all the communication with the IRS if you ever get audited.
Wow.
It frees up your time and energy to focus on running your business, and it can really reduce stress.
That's something I definitely want to consider, especially if, I'm handling my own bookkeeping and tax filing. Having that expert support could be a game changer.
Oh yeah, it can make a world of difference. Avoids potential headaches down the road.
Right. Well, we've uncovered so much valuable information about S-Corp today, from the structural basics to the tax advantages.
Mm-hmm.
And now these incredible perks, it's clear they offer a lot of potential for small business owners. But before we get too carried away, I think it's important to take a step back and ask, are there any downsides? What's the catch?
Yeah, that's a really smart question to ask. Just like any business structure, S-Corp, they come with their own set of trade-offs.
Okay.
And DIY Corporation is really good about, about being upfront about those.
Okay, good.
One thing it really emphasizes is the need for, meticulous record keeping.
Okay.
S-Corp is subject to stricter regulatory requirements.
Some more paperwork.
There is. And it also often means, budgeting for additional accounting and legal services.
To make sure everything's, being done correctly.
Yeah, to make sure you're staying on top of everything.
Okay. Are there any other potential drawbacks that we should be aware of?
Well, keep in mind that the IRS, they tend to scrutinize S-Corp shareholder salaries pretty carefully.
Right.
They want to make sure that owners aren't trying to avoid those payroll taxes that we talked about earlier.
Right, that reasonable salary rule.
Exactly.
It sounds like, finding that sweet spot between tax efficiency and compliance is crucial.
Yeah, you don't want to end up in hot water with the IRS.
No, nobody wants that.
Another thing to consider is the restriction on shareholder types.
Okay.
Only certain trusts and estates are allowed to hold shares in an S-Corp.
So if you're thinking about, bringing on a wider range of investors down the line, that could be a limiting factor.
Exactly. And finally, although we talked about how S-Corp can avoid double taxation at the federal level, some states, they impose their own taxes on S-Corp.
So it's not a guaranteed tax haven in every state.
Unfortunately, tax laws are rarely that straightforward.
Right.
It really depends on the specific state where your business is located.
Okay.
DIY Corporation recommends doing some, homework
Yeah,
on your state's rules.
to make sure you're, getting the full picture.
Yeah,
It sounds like it's always a good idea to, consult with a tax professional
absolutely.
to make sure that you're making the right decision, for your specific situation.
They can help you navigate all the complexities and nuances of the tax code.
Right. This has been such an eye-opening conversation. I feel like we've gone from 0 to 60 when it comes to understanding S-Corp.
We've covered a lot of ground.
We've explored the structure, the tax advantages, the hidden perks, and even some of the potential downsides.
I think we hit all the high points.
We did. But before we wrap things up, I have one final burning question.
Okay, let's hear it.
Based on everything we've learned today, with all the potential benefits, tax savings, business growth, personal financial security,
Mm-hmm.
could exploring the S-Corp structure be the strategic move your business needs?
That's the million-dollar question, isn't it?
It is.
And ultimately, it's one that only you can answer.
Right.
We've given you the knowledge, the insights, and now it's time to apply that knowledge to your unique business and goals.
So take what you've learned today.
Yes.
Do a little more research.
Yeah.
Talk to a tax advisor.
Always a good idea.
And most importantly, make the decision that feels right for you and your business.
Knowledge is power.
Mm.
The more you know, the better you're able to make those strategic decisions.
That set you up for success.
Exactly.
Well, that brings us to the end of our deep dive into the world of S corporations. We hope you found it valuable, and we'll see you next time for another deep dive into a topic that matters to you.
See you next time.